This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Thanks for being with us here on Business Weekend. We've talked about households grumbling about interest rates, energy bills and their cost of living. But there's also something else that they might become increasingly wary about. After strong home price growth since the pandemic, there are now signs the growth cycle is either over or close to coming to an end. Edward Boyd has scattered around the property market just to get a sense about what happens next.
Soaring prices, limited supply, high interest rates and record low levels of affordability were some of the big themes for Australia's property market this year. According to PropTrack, prices in November reached a new peak, capping off 23 consecutive months of growth. The median price of a home in Australia is now worth $800,000.
So we've seen that the housing market has really remained resilient to the sustained higher interest rate environment this year, and of course those persistent affordability pressures that are weighing on would-be homeowners. So national prices lifting by a further 0.15% in November. That brings prices nationally up by around 5% on levels seen this time last year, or 5.5% on levels seen this time last year.
But experts say that the cracks are starting to appear in the market, with auction clearance rates during the spring selling season, the busiest time of the year, in Sydney and Melbourne falling below 50%. When a property passes in, it usually becomes advertised at a fixed price and eventually sold via private treaty. And this adds to the excess stock levels and can result in prices falling even further.
On our numbers in Sydney, we're recording an auction clearance rate right now of running at about 46%, so below 50%. And in Melbourne, the number's running at about 48%. So anything on our numbers that are below 50% generally suggests that we're expecting to see some imminent housing price falls. And certainly in the case of Sydney and Melbourne, where the market's already falling, these numbers suggest that we're going to see further falls as we go into the new year.
Melbourne began 2024 as the third most expensive city in the nation, behind Sydney and Canberra. But as the year went on, it was leapfrogged by Brisbane and Adelaide to finish in 5th place. Prices have fallen 1.6% in Melbourne this year, and Sydney prices lifted just 0.1% during the month of November.
So buyers really able to take advantage of that increase in choice in both those markets. So Sydney, Melbourne, total stock on market now more than 20% above the prior 5-year average. In Melbourne, actually closer to 30% above the prior 5-year average. In some of those smaller capital city markets like Brisbane, Adelaide and Perth, although we have seen the number of new listings hitting the market increasing throughout the spring selling season, the strength in buyer demand being a little bit stronger in those markets, total stock on market still remains relatively constrained, and that's one of the factors driving that stronger pace of home price growth in those markets.
Prices in Perth jumped almost 19% this year. Adelaide prices soared almost 15%, and Brisbane prices lifted about 13%. This week, the ABS released the October building approvals numbers, showing that the number of buildings approved for construction surged about 4% to roughly 15,500. That's the highest level in 22 months. While this is positive news for the supply of housing, the construction sector believes it's just a small step in the right direction. The problem for builders has been rising costs, skills shortages, wet weather, and a lack of confidence in the home renovation market.
Unfortunately, developers large and small, as well as mum and dad owners for homes, are putting off investments. They're seeing two things. The cost of building a home is up to 30 to 40% higher than it was 5 years ago. And then when you couple that with the stubborn inflation and also stubborn interest rates with no rate cut anytime soon, we're seeing a lot of demand just not being realised. People are holding on to their purse strings. And as such, while we know there's massive demand there, it's actually not eventuating into contracts, which in some instances builders are saying that they're now seeing a decline in their forward book for the next 12 months.
This year, the federal government set a target to build 1.2 million homes within the next 5 years. At the current rate of development, Australia is likely to fall short by about 500,000 homes. What's clear is that market conditions will improve as soon as the Reserve Bank cuts interest rates.
Absolutely. Confidence is king in the building and construction industry, and we need two things to occur. One, we need to see interest rates down, and we also need to see our costs decline. And costs at the moment relate to things such as workforce shortages and the delay that it's taking in undertaking building. Pre-COVID, it was taking us about 9 months to build a detached house. Now it's 13 months. And delays mean money, and that means an escalation of costs.
Australia's population has also been growing at its fastest level since the 1950s, which further compounds the housing supply issues. Louis Christopher from SQM Research expects the market conditions in Melbourne and Sydney to deteriorate further in early 2025.
Yes, we are expecting the falls to accelerate for the first half of 2025 or until such point in time we do get that rate cut. When we consider all the leading indicators such as auction clearance rates, such as the total number of properties on the market, such as vendor discounting, which is definitely occurring and accelerating right now, they're all pointing to the fact that housing price falls are here to stay for at least the next quarter, if not the next 2 quarters.
The X factor is when the Reserve Bank will start cutting interest rates. Most economists believe the first rate cut will be in May 2025. But this week, after the softer than expected GDP numbers, money markets have shifted their forecast forward and are now expecting rates to fall in April. Rate cuts improve confidence and increase borrowing power for buyers, which means higher prices again.
We believe for 2025 it's going to be a mixed housing market once again, with some of the trends that we've recorded in 2024 going into 2025. So it depends very much on the city we're talking about. Once again, we believe that Perth's going to be the outperformer. It will record a little bit slower growth compared to 2024, but the forecast is for housing prices to rise in Perth by between 14 to 19%. On the other hand, Sydney and Melbourne, we're forecasting housing price falls of between 1 to 5%.
The other X factor next year is the looming federal election, which needs to be held by May. The building sector lobby group's hoping to see more housing-friendly policies, which will bring confidence back to the market.
Yes, we're hoping that 2025 is more positive than 24, but there's a few buts there. We've got to solve those workforce shortages and we need to see those interest rates decline. And I still think there's a lot of variables that can impact either of those at the moment. That is why it's so critical from our perspective that in the lead up to a federal election, both political parties are focusing on our housing crisis and the ways upon which we need to resolve it.